Welcome to Lendgo's Mortgage Mastery Podcast, the ultimate guide to mastering your home financing journey. In each episode, we bring you expert insights, practical tips, and real stories to empower you on your path to financial freedom. Unlocking the door to your dream vacation home begins with understanding how to secure the right mortgage. It's not just about the destination. It's about creating lasting memories in a place you can call your own. In today's episode, brought to you by Lendgo, we delve into the essential steps to securing a mortgage for your vacation home. From financial preparation to choosing the right mortgage and closing the deal, we provide valuable insights to simplify this exciting journey. Maybe you're looking for a cozy cabin in the mountains or a beachfront paradise. Today's episode is going to give you the knowledge and the tools to turn that dream into a reality. So join us today as we explore how to get a mortgage for a vacation home, and let's go on this exciting adventure together. Stepping into the realm of securing a vacation home loan marks a thrilling journey toward owning your ideal retreat. While the process may initially appear complicated, armed with the right insights, it becomes achievable. Our goal is to streamline the mortgage process for your vacation home and guide you through each phase from preparation to closing. Securing a loan for a vacation home represents a milestone in realizing your dream retreat. However, preparation is key to navigating this process effectively. Here are 5 things you need to know to prepare for a vacation home loan. 1. Understanding your credit score. Your credit score is crucial in loan approval. Lenders assess your creditworthiness based on this score, with higher scores often leading to more favorable loan terms. Before applying for a vacation home loan, review your credit report for any errors and take steps to improve your score. This may involve paying down existing debt, making timely payments, and addressing discrepancies on your credit report. 2, managing your debt-to-income ratio. Lenders evaluate your ability to manage monthly payments by analyzing your debt-to-income ratio. Keeping that ratio low demonstrates financial stability, and it increases your chance of loan approval. To improve your debt-to-income ratio, you could consider reducing existing debt, especially high credit card debt, before applying for a vacation home loan. 3, budgeting for extra costs. Beyond the mortgage, owning a second home has a lot of additional expenses like property taxes, insurance, utilities, maintenance costs. Investigating these expenses is really important before creating a budget for your vacation home. Estimating these costs in advance clarifies your financial obligations and ensures you can comfortably afford the property. 4, get your documents in order. When applying for a vacation home loan, you need to provide various documents to the lender. These typically include tax returns, W-2 forms, bank statements, and proof of income. So gather all these documents beforehand, and that will streamline the application process, and it demonstrates your financial stability to the lender. And 5, the importance of pre-approval. Obtaining a pre-approval for a loan, that's a really good strategic move that enhances your position as a buyer. Pre-approval signals to sellers that you are a serious and qualified buyer. This strengthens your bargaining power in the negotiations. Additionally, pre-approval clarifies how much you can afford, allowing you to focus your search on priorities within your budget. By understanding these key steps, you can position yourself for success when applying for a vacation home loan. Take these proactive measures to manage your finances, to gather necessary documents, obtain pre-approval, and all of that will set the stage for a smooth loan application process. With careful planning and preparation, you can completely embark on this journey towards owning your dream vacation home. When it comes to selecting the right mortgage for your vacation home, understanding the differences between fixed rate and adjustable rate mortgages is really important. Fixed rate mortgages offer stability with a consistent interest rate throughout the loan term. This predictability makes budgeting easier as your monthly payments will remain consistent. But fixed rate mortgages typically start with higher interest rates than adjustable mortgages. On the other hand, adjustable rate mortgages, known as ARMs, begin with a lower interest rate, which can fluctuate over time based on market conditions. While initial payments may be lower, there's a risk of future rate increase, potentially leading to higher monthly payments. Deciding between these options requires careful consideration of your financial goals and risk tolerance. If you prefer certainty and plan to keep the vacation home for an extended period, a fixed rate mortgage is probably the better choice. Alternatively, an adjustable rate mortgage could offer initial savings if you anticipate selling the property or if you're comfortable with potential payment fluctuations. Really, the right mortgage for your vacation home is going to depend on your unique circumstances or preferences. But consulting with a mortgage advisor could help you weigh the pros and cons of each option and make an informed decision that's aligned with your financial objectives. Fixed rate mortgages offer stability with a consistent interest rate throughout the repayment period. This provides predictability for budgeting purposes. With fixed rate mortgages, homeowners can confidently anticipate their monthly mortgage payments as they remain unchanged. This reliability is particularly advantageous for those seeking financial predictability and consistency in their housing expenses. But comparing that to adjustable rate mortgages like ARMs, fixed rate mortgages often come with higher initial interest rates. While the stability of fixed rate mortgages offers peace of mind, borrowers may initially pay more in interests compared to using ARMs. The term of your loan, now that's a really important factor to consider when choosing a mortgage for your vacation home, because that will directly impact your monthly payments and also the total interest you're going to pay over the life of the loan. Generally, loans are available in various terms. The most common are 15-year or 30-year. Shorter loan terms, such as 15 years, typically come with lower interest rates, but higher monthly payments. Despite the higher monthly payments, opting for shorter term loans allows you to save on interest and pay off the loan faster. This can result in substantial long-term savings and faster equity growth in your vacation home. On the other hand, longer loan terms like 30 years offer lower monthly payments, but typically come with higher interest rates. While the lower monthly payments may be more manageable for some borrowers, opting for a longer term loan means paying more in total interest over the life of the loan. However, this option provides greater flexibility in budgeting, and it may be preferable for those seeking lower monthly obligations. Ultimately, the choice between loan terms depends on your financial situation, long-term goals, and preferences regarding monthly payments and overall interest costs. If you're securing a mortgage for a vacation home, conduct a really thorough comparison of lenders. This is really important for finding the most favorable terms and saving money in the long run. When you shop around and compare offers with multiple lenders, you can potentially save thousands of dollars over the life of your loan. One of the really important factors to consider when comparing lenders is the interest rate they offer. Even a slight difference in interest rates can have a significant impact on your monthly payments and the total amount of interest paid over the loan term. On top of that, pay attention to the fees associated with each lender's offer. These fees could include organization fees, appraisal fees, closing costs, and there's even more expenses. While other lenders may offer lower interest rates, they may offset this with higher fees and vice versa. So it's really important to consider the overall cost of the loan, including interest rates and fees. So carefully review the loan terms offered by each lender, including the duration of the loan, the prepayment penalties, and any other conditions or restrictions that may apply. By comparing these factors among different lenders, you can make an informed decision and select the lender that offers the best overall package for your vacation home loan. Securing a mortgage for a vacation home involves navigating through 3 stages of the application, and understanding these 3 stages will help you have a smooth and successful transaction. Here are the 3 stages you need to know. 1. Documentation and application. Gathering the necessary documents is the first step in applying for a vacation home. These documents include W-2 forms, tax returns for the last 2 years, recent bank statements, and proof of any additional income sources. Lenders use these documents to assess your financial health and determine if you're eligible for the loan. Second phase, the pre-approval. Obtaining pre-approval from a lender is a strategic move in the vacation home buying process. Pre-approval involves thoroughly examining your financial background by the lender to determine the amount they are willing to lend to you. Unlike pre-qualification, which is a less formal estimate, pre-approval provides a clear budget for your property search. It also demonstrates to sellers that you are a serious buyer, potentially making your offer more competitive. And the third phase, home appraisal. An appraisal is a mandatory part of securing a mortgage for a vacation home. This will make sure that the property sale price aligns with its market value. During this appraisal process, an appraiser evaluates the home's condition, the location, and the features, comparing it with similar properties in the area. The assessment protects you from overpaying for the vacation home and assures the lender that the loan amount is suitable for the property's value. Of course, closing the vacation home is the final step in the mortgage process. And as you prepare for this significant milestone, it's essential to understand what closing costs involve. Loan origination fee. The loan origination fee covers the administrative costs incurred by the lender during the mortgage process, typically calculated as a percentage of the loan amount. This fee compensates the lender for processing your loan application and underwriting the mortgage. Appraisal fee. Before the closing, an appraisal of the vacation home is conducted to determine its market value. The appraisal fee is paid to the appraisal company for their assessment. This makes sure the property sale price aligns with the appraised value. Title insurance and search. Title insurance protects you and the lender against any issues with a property's title, such as undisclosed liens or ownership disputes. This title search fee covers the costs of examining public records to verify the property's ownership history and make sure you have a clear title. Home inspection fee. A professional home inspection is really important to uncover any potential issues with the vacation home's structure or appliances. The home inspection fee compensates the inspector for their evaluation, providing you with peace of mind about the property's condition. Closing or escrow fee. The closing or the escrow fee is paid to the entity responsible for overseeing the closing process. This fee covers the administrative costs that are associated with coordinating the final steps of the transaction. This includes things like document preparation and fund distributions. Property taxes. Depending on the timing of your purchase, you may need to pay a portion of the property taxes up front at closing. These taxes contribute to the ongoing expenses associated with owning the vacation home. Homeowners insurance. Homeowners insurance is a requirement before closing and may need to be prepaid at the time of the transaction. This insurance protects your investment in the vacation home against damages or loss due to accidents, weather, and provides financial security for you and your lender. Understanding these closing costs are going to help you budget effectively, and it will help you have a smooth closing process for your vacation home purchase. Now, after you navigate through the mortgage process of your vacation home, the final approval, the closing stage marks the exciting transition to home ownership. Here's what you can expect during that crucial phase: final loan approval. Once your vacation home loan is conditionally approved, it's essential to ensure that all conditions set by the lender are met promptly. This may involve providing additional documentation or satisfying any outstanding requirements in order to receive the final loan approval. Closing disclosure review. At least 3 days before the scheduled closing date, you'll receive a closing disclosure document outlining the final loan term and the closing costs. Take the time to review this document carefully to ensure it is accurate. This is going to help clarify any of your financial obligations. The walkthrough. Before closing, it's customary to conduct a final walkthrough of the vacation home to verify that it's in the agreed upon condition. This step allows you to identify any issues and address them before finalizing the transaction. Closing day. On the scheduled closing day, you'll meet with all parties involved, including your real estate agent, the lender, and even possibly the seller. During this meeting, you'll sign all necessary documents, including the mortgage agreement and property deed. Additionally, you'll be required to pay the remaining down payment and all closing costs associated with the transaction. Receiving the keys. Upon completion of all the paperwork and the payments, you'll officially become the owner of your vacation home. As a symbolic gesture, you'll receive the keys to your new property, marking the completion of your journey to owning a vacation home. By understanding the closing process and preparing accordingly, you can make sure you have a really seamless transaction into becoming a vacation homeowner. Securing a vacation home loan marks the beginning of an exciting journey towards owning your dream getaway. By following the steps outlined in today's episode, you will have valuable insight into the mortgage process, and you're going to know how to navigate it successfully. Remember, the key to a smooth experience lies in understanding your options, preparing your finances, and selecting the right mortgage that aligns with your needs and your goals. Owning a vacation home is more than just a place to escape to. It's about creating cherished memories with loved ones that last a lifetime. Maybe you're getting a cozy cabin in the mountain or a beachfront oasis. Your vacation home is a place where you can unwind, relax, and create new experiences. So if you're ready to take that step towards turning your dream of owning a vacation home into reality, Lendgo is here to help. Our team of experts is dedicated to providing you with the best options for your vacation home loan. We want to make sure you have a seamless and stress-free experience from start to finish. So reach out to Lendgo today and let's go on this journey together and make your dream vacation home a reality. We hope today's journey into the world of home financing has left you inspired and equipped to make informed decisions on your path to financial freedom. Remember, your journey doesn't end here. To stay connected with the latest tips, trends, and success stories, be sure to hit that subscribe button. Don't miss out on upcoming episodes filled with expert insights and practical advice tailored just for you. For even more resources and exclusive content, visit our website at lendgo.com. Until next time, take control of your financial freedom And remember, your journey to financial freedom is just beginning. Subscribe, visit our website, and join us again next week. Happy financing!